Okay, so today I'm going to talk about the Swiss franc. But before we talk about that, I want to go back to yesterday's video. Lots of comments. Most of the comments are going around, hey, how can a pension fund? They have to get the best, buy the best stocks, get the best yield, and so forth. I get it, okay? I didn't say all the money. Even the governments, it's 10%. But think about it this way. I don't know how long it was, 6, 7, 8 years. The United States was pulling in between 60 and 65% of every investable dollar in the world into our market. And we had the number one market by far, way above everybody else, okay? So two thoughts. If a government says to their pension fund, you must invest 10%, that's it. The other 90%, go anywhere you want, okay? 10%. What's the first thing the PM will do of the pension fund? He'll stop immediate buying of anything new until they get down to the 10%. So just by saying 10%, we literally stop any new buys. Then you get down 10%. Look at yesterday, we talked, there was like 3 countries, or 2 of them were $25 trillion. Take 10%. That's $2.5 trillion. So you got no money buying, and now you're going to sell $2.5 trillion. It's not either or. It's not black or white. It's not 100% zero. It's not. Now, do I believe as over time, 3, 4 years from now, when they're really struggling to bring in capital, that's why the title, third part, is called Pension Fund Capital. That's what's going to happen. All right. Swiss franc. Everybody who follows this channel knows, we've been saying for 3 years now, that when the currencies go crazy, there's 3, possibly 4, we'll talk about that, alternative places that people put their money. And it's gold, silver, the Swiss franc. And I said 3 years ago, could be crypto. I don't think it is, in my own personal opinion, but I know a lot of the crypto bros, they think it is. But if you're a crypto bro today, you have to be questioning. One, it's certainly not an alternative currency. You're down more than the dollar. The dollar's down 10% last year, 3% this year. And when I first met, we were like 125, 126 on crypto. Now it's 84. So it's a big percent. So it's not an alternative currency. Then when you say it's an alternative value, well, again, look at gold and silver and look at crypto. So I would say crypto still hasn't answered the question, what actually is, all right? But what's going on with the Swiss franc? Now, this is the Swiss franc since 1981, and we'll come back and talk about this. I just want to show you how it's been going up over, the last, however you want to do that. It's almost 45 years, but let's take a closer look. And this is what made me do the video. So we can see what has been going on. We've been basically steady, and then boom, down we go again. Or I should say, up goes the Swiss franc, and this is against the US dollar. But it's also going up against the euro, okay? Now look, I'm going to go through these quick. This is stop and read, that's up to you. But it says Swiss franc surges at decade high as traders seek reliable haven. You can see here in the second paragraph, up 14% last year, 3% this year, and their inflation rate is 0.1, and it looks like it's going to go negative. They're worried about that, okay? And you can see that it's been surging just in the last week or so. So the first paragraph, they say Greenland has concerns, given everybody concerns, and investors fret over the Trump administration's erratic policymaking and the independence of the country's central bank. The yen, another traditional haven during times of market stress, has been volatile amid investor anxiety over the relentless sell-off of the Japanese government bonds, which we covered last week. The 40 years are down 17 points. Let me tell you something, that's amazing, okay? Now, this first paragraph is important because the U.S. has accused Switzerland of being a currency manipulator, and we're going to put 50% tariffs on them and all this other stuff, okay? But last year, when the yen took off, I mean, they had to come hat in hand and ask us, could they intervene to save their country? And we said, yes, there is a valid reason for doing this. But it also says the SMB has to be more careful by how it intervenes. Putting a floor around the euro franc rate would sit awkwardly with the communique. So you have to understand something. Even though we look at it as the dollar Swiss, the Swiss euro is like 95% of Switzerland's trade. So that's the most important thing to Switzerland and to the Europeans. And you'll see that here is the euro Swiss franc cross rate, whatever you want to call it. All right. And you can see here that the Swiss franc is ratcheting up. So the word is if they break 0.90, okay, this is going to cause major problem. What it is, I have not a clue, but that's what everyone's saying. They don't want to cross 0.89. Yeah, they don't want to go to 0.89. All right, so when I was a young broker and I had no clue what was going on in the world, and we went through what we went through in the 80s with the currencies, and again, I had no clue. All I remember, every single day, it was about the Swiss franc going up, going up, going up, and how to stop it. They were printing money right and left every day. They were making announcements during the day. We printed this much Swiss francs today, okay, to stop people from buying the Swiss franc. That's how bad it was, okay? So the Swiss, it's great that you're a haven currency, and it's absolutely horrific when all the currencies in the world go crazy and you're the Swiss franc. You're the one who pays the piper. So back in the 80s, very similar today, the United States told the world that the dollar is way over valued, and we want to devalue the dollar, okay? And so we went through several, whatever you want to call them, currency conferences, all right, to get this done. But if you look at here, you can stop and read this. This is by year, it doesn't matter to today, but it gives you how big things are. 1985 was the pivotal year, the Plaza Accord. And the Plaza Accord caused all kinds of problems, okay? And so we had to have the Louvre Accord 2 years later to stabilize what we did with the Plaza Accord. So all the geniuses in the world wanted to bring down the dollar. We did, and we brought it down a lot. We're going to get into that in a second. But the problem is we almost blew up the whole world, okay? And the fact is, I would argue, if you go back to here and look at Japan, they never got over this. So what was the Plaza Accord, okay? So it was the G5. They got together in the Plaza Hotel to coordinate intervention to weaken the USD against the yen, Deutschmark, and other currencies. And our trade deficit was 3.5% of GDP. We had to address that. That was our concern. By the way, we're 5.9% last year. In 2024, we were 6.3%, okay? And so what they did joint FX market operations. The G5 sold the USD and bought all the other non-dollar currencies, the yen and so forth and so on. Immediate impact, the dollar fell 4% within days, and the USD lost 50% versus the yen, 260 to 120, and 40% against the Deutschmark. And it was our auto industry that put the pressure on the government to do this. And so here's the Louvre Accord. You can read the objectives, basically stopping the dollar from falling out of bed, and notice their mechanism: buy US dollars and sell all the other currencies. And here are the commitments that each country made. I'll just say that the US didn't meet their commitment, and so this is what really happened. So 2 things today. We saw what happened to the Swiss franc last year on Liberation Day as everyone ran into that. And then it stabilized, for 9-10 months. And now all of a sudden it's falling out of bed again. So why are people, big people, institutions, now so afraid that they're now buying the Swiss franc? You see gold and silver, they're going racing up, but they even went back to the Swiss franc, which I didn't think they would do, given there's no interest there. And in fact is, they say now they're going to go negative on interest rates. Tell me what you think, and like and follow.